Hello, in this video, we will summarize about operating segment MFRS 8. My name is Farah Kristina binti Kamaruzaman and my friend is
Siti Nur Hafiza binti Said.
We are from Bachelor in Accounting Hons, University Kuala Lumpur. We will explain about the definitions, the disclosure, criteria, segment that should be disclosed, general disclosure, and two examples about MFRS 8. First, let me explain about the scope. MFRS 8 applies to the separate or individual financial statement of an entity and to the consolidated financial statement of a group with a parent, whose debt or equity instrument are traded in a public market, or that file is in the process of filing its consolidated financial statement with a Securities Commission other regulatory organization for the purpose of issuing any class of instrument in a public market. However, when both separate and consolidated financial statements for the parent are presented in a single financial report, segment information need be presented only on the basis of this consolidated financial statement.
Next is the definitions of operating segments. An operating segment is a component of an entity that engages in business activities from which it may earn revenues and incur expenses, including revenue and expenses relating to transactions with other components of the same entity, whose operating results are reviewed regularly by the entity's chief operating decision maker to make decisions about resources to be allocated to the segments and assets it's performed for which discrete financial information is available.
Next is disclosure of MFRS 8. An operating segment result must be disclosed if: first, segment revenue more than 10% of the total revenue, internal and external. Second, segment profit more than 10% of the total profit excluding loss. Third, segment asset more than 10% of the total asset. If the total reportable segment revenue does not make up at least 75% of external revenue, then additional segment will need to be disclosed.
The criteria of MFRS 8: two or more operating segments may be combined if they have similar economic characteristics with: first, the nature of product or service, the methods used to distribute the product or service, the nature of production process, the type of class of customer, the nature of the regulatory environment.
Each reportable segment should be disclosed: segment result, segment revenue, segment liabilities, segment asset. Depreciation and amortization are the non-cash, capital expenditure, non-current asset, income tax expenses, profit or loss, investment in associate or jointly controlled entities, share of profit of equity accounted associated and jointly controlled entities.
General disclosure are: how the operating segments have been identified, the product and service that the groups provides, reliance on major customer, geographical informations, limited to revenue and non-current asset.
Example 1. Gulf is preparing for operating segment disclosure note for the first time following its listing on the local stock exchange during the year. Its chief operating decision maker, CODM, regularly review the result of its three separate divisions: domestic railway operation, international railway operation, railway construction. Gulf is intending to report two operating segments in its disclosure note as opposed to the three reviewed by the CODM. The domestic and international operations are to be combined because it is felt that they have similar economic characteristics due to the service that they offer. The domestic corporation involves a competitive tender process to run the railway service, which is then awarded by the local transport authority. The local transport authority then set the ticket price and collect the fares, which are then distributed among the various operators running the contracts. The international operation ticket price are set by Gulf, who collect the fares from the passenger directly. Advise Gulf as to whether the proposed combination of the two operating segments is appropriate. The answer for example 1 is the proposed combination of the two operating segments is not appropriate because domestic railway operation and international railway operation have different type or class of customer. Even the nature of product or service are same. According to MFRS 8 operation segment, the type of customer must be same. International railway operations, ticket price are set by Gulf, who collect the fares from the passenger directly, while domestic railway operation involve a competitive tender process to run the railway service. The local transport authority that set the ticket price and collect the fares.
Example 2. Entity A has the following operating segment. Identify the reportable segment. It has 8 segments, which is K, food manufacturing China, L, food manufacturing India, M, food retail, N, IT consulting Australia, O, IT consulting Asia, P, electrical good retail, Q, planned hire service, R, financial service. So, the answer for entity A has the following operating segments. Segment revenue need to be more than 10%, and we only can accept K 25%, M 25%, and 50%. And for LO, PQR is less than 10%. Segment L acceptable because the percentage for profit and loss and the total asset is more than 10%, although the amount of revenue is less than 10%. So, the total revenue for KLMN is 72%. Initial reputable segment will be KLMNN. The total revenue of these 4 segments amounts to less than 75%. Other reputable segments will have to be identified or be aggregated. O could be aggregated with N or even be reported as a separate reportable segments because they have the same nature of product or service. N, IT consultant, O, IT consultant. P, Q, and R will be reported under all other segments.
Our reference is from ACCA Strategic Business Reporting, SBR Notes, and Jenlaza Financial Reporting Standard.
That's all for MFRS 8 operating segments. Thank you.